Hey, my name's James Nicholson. Welcome to my YouTube channel. A big video today. Interest rate rises have been paused. 14 consecutive back-to-back interest rate rises. We were expecting another one, at least a lot of people were. For a long time this week, it was expected, 80% of analysts expected a rise. That changed a little bit yesterday. And it's what happened yesterday that made a big difference to today's decision. So there's a lot to go on here. And there's actually very good news for mortgage holders that I want to share with you today from today's outcome. So before we jump into this, if you haven't done already, or you're new to the channel, we've got so much content every single day on this channel. So much is going on. What a week we've been in. So while you're here, I don't want you to miss out on all the videos we make. So do subscribe to the channel and hit the bell notification while you're here. And make sure you smash that like button, tickle the like button, do something with the like button because that really helps us with the YouTube algorithm. And we want to get more views on the channel. We're going to probably hit 150,000 views on the channel this month. Last month, I was gobsmacked that we hit 100,000. We've already blown that away this month in September already. So thank you to everyone. So what's going on? Well, look, inflation has been crazy. It's been higher than 10%. It was 11% at one stage and it was sticking around. And we were expecting, or at least the government were hinting, Michael Gove was doing the interviews on Sky News, BBC, other newspapers. He was suggesting that the August inflation data would be a blip, meaning it would be back up. And so a lot of people read that and felt that we were going to have 7.1% inflation. We were at 6.8 in July. Now, in fact, we actually dropped. Some of you say in the comments they fudged numbers. I don't care. If it gets the inflation number off our back and we can stop talking about interest rates as well, we can all get back to business, and that's good. Because higher interest rates aren't good for anyone, in my opinion. Now, savers, yes, you might benefit, but a lot of people either have a mortgage or they rent. Rent's going through the roof. Landlords are leaving because of interest rate rises and various other things. And so it's just not a good situation to be in. It's not a problem, in my opinion, to have interest rates where they are. It's the speed that we went up. That was really shocking for a lot of people. And maybe it needed to happen. Maybe it was inevitable. It was always going to happen. But it's that speed of increase, particularly for landlords where we only pay interest. So some landlords potentially have had mortgages that have tripled, or some people have had them quadruple, according to my broker. So it's been a really, really strange time. So 14 meetings back to back, we've had a rise. This time we're sticking, which is good news. Some people will comment below saying, why are we celebrating because the rates are so high? Well, we're celebrating because they've paused and they're not going up anymore. Now, this gives us some time because there's no Bank of England meeting in October. Next one's in November. So that gives us some time to bring down inflation a little bit more, hopefully. Not that we can do much about it, but hopefully, as they say, they keep telling us it's going to get to less than 5% by Christmas. So hopefully we see some more drops next month. And that means that maybe this is the peak of interest rates. That's what some people are expecting. So base rate is sticking at 5.25. And I'm telling you, I'm happy with that. I'm really happy with that. So what does this mean as well? So that's based off a drop in inflation. I've got to check my notes in case you're wondering what I'm looking at down here. Now, Bank of England, they mentioned in their notes, these are their concerns. And so their concerns at the moment are wages and services. These are the two things that they're keeping an eye on. So wages are going up higher than inflation. It's around 8%. Inflation's at 6.8. Now, that's really annoying. I'm sure you get annoyed by this stuff as well, right? Because what we're saying there is everyone's got less money. Things are less affordable. You're jacking up the rates. So our rent's going up. Our mortgage payments are going up. But you want us to just be happy with lower wages. Not really right, is it? But if the wages do go up, keep going up too much, that means people will spend more, inflation will stick around. And so that's something that they're keeping an eye on, is the wage inflation. Services are also, a lot of service-based business have been putting their prices up. at higher rates of inflation as well. So they're keeping an eye on that. They're just letting us know these are the two sectors of the economy that we're worried about and we want to really keep an eye on. So what else is going on? Well, the votes, right? So there's 9 members of the monetary policy at the Bank of England. And so the votes were 5 to hold and 4 to raise, which is close, right? That gives us our 9 in total. That's pretty close. It could, one person flipping, and we could have had another raise in interest rates. Now, interestingly enough, the Andrew Bailey, the Bank of England governor, he was on the side of the pause, and it seemed the more senior people in there were more interested in pausing rather than other people in that committee. So what else is going on? So the pound dropped, the value of the pound dropped. Why does we even need to consider that? Well, that, as we're a company that imports a lot of stuff. So today, the pound is worth less than it was yesterday. So that now means that it's going to cost us more pounds to buy stuff in from America, to buy stuff in from Saudi Arabia, oil and places like this. So that means that oil, anything that we buy, grain, medical equipment, that is more expensive to us now than it was yesterday with the pound dropping, which could feed into those inflation figures coming through for the rest of the year. Something to keep an eye on at least. What else have we got here? Andrew Bailey saying that the current monetary policy, the rate at 5.25 is restrictive. That means that it's doing something. It's slowing down the economy. And we've seen that. We've seen the last quarter, we had a decline in domestic output. That means if we have another one this quarter, we're probably going to be officially in a recession now. So that's interesting. Now, as a property channel, this is where I'm a little bit more interested. And so swap rates, this is where banks actually borrow money, and they've dropped. Okay, so what does that mean? That means that banks are able to get money cheaper than they were yesterday. Now, what we've seen recently is that banks have been having a pricing war. And so if they're able to get money cheaper than they were yesterday, there's a chance, and we'll see this in about a week or so, we'll start to really understand, are they going to do this or not? But there is now a chance that mortgage rates on your new products, on your remortgages, there's a chance if the swap rates have dropped that they could drop in price again. The value, the price that you can get your mortgage for. So that's really good. We've seen rates that have been less than 5% on mortgages recently. That is positive news, and hopefully that feeds through to a bit more of a price war and people trying to get our business. That's what we want. We want banks competing that want the business. The more that happens, the better for everyone. So look, this is a positive meeting in my opinion. It could have gone up. There was a chance that it was going to go up. At the beginning of the week, we were expecting this to go up. This is a meeting that has a fairly decent gap between the next one in November, and that gives us time for inflation to come down, and way more likely now that this could be, not saying it is, but it could be a peak. Now, with house prices, what do I think this is going to do? I still think house prices are coming down. I haven't ever said that they weren't going to come down. I've said that it's going to be slower than people think. Now, what do I think the outcome from this will be on house prices? Let's just say house prices were going to drop 10%. I think that this will knock off about a 1 to 2% drop in the house prices, because what you're going to see is some people will come into this now thinking maybe this is the peak. This is the peak. And so there are tons of people sitting on the sidelines that can afford to buy property, maybe with cash, right? Maybe they're cash buyers. They can afford it, or they can afford it on a mortgage, but they want to see what's going on with the house market. So maybe they now suddenly become active. Maybe it doesn't mean that they're going to buy this year. It might mean that they start looking and they buy something by next summer. But it means more people are going to look at this and say, this could be near the bottom, not the bottom for sure. House prices could go a long way down, but it could get closer to the bottom, and that will activate some people to start making decisions and start looking around. Now, also, if we start seeing swap rates going down even more, banks getting more competitive, that brings in more people into the market, and that's good. Now, that might not stop a collapse in house prices, but it might mean that they go down less, marginally, 1%, 2% less than they would have if this didn't happen. Now, think about this. Rates were expected to peak at 6.5%, closer also to 7% in some people's opinion. And if that's where we end up, then it's not great, but it's way better than it could have been. And that's a win in my opinion. What do you think about today's decision? Do comment below. Let's get involved and get the conversation going. Smash the like button, tickle the like button, whatever you've got to do. Just do something. Do something and get some more views for us on the video. Let's hope. If we've done 100,000 views in August, and we might do 150,000 in September, let's try and get 200,000 in October. So do comment below, let me know your thoughts and opinions. Subscribe, check out some other content on my channel. Why don't you go and watch this video right here?